In this video, we are going to talk about the introduction of GST, tax types, and working under GST. Under GST introduction, we will cover what is GST, its benefits, and different taxes under GST. GST is an indirect tax reform which aims to remove the tax barriers between states and create a single market. GST would be levied on supply of goods and services, and hence the prevalent concepts of levy of excise on manufacture, VAT, CST on sales, entry tax on entry of goods in local area would no longer be relevant. GST is a destination-based consumption tax which essentially implies that the revenue will accrue to the state where the consumer resides. These are the central taxes that will be subsumed under GST. For example, excise duty, service tax, etc. These are the state taxes that will be subsumed under GST. For example, VAT, central sales tax, etc. These are the benefits of GST. And also, GST will eliminate 17 indirect taxes and compliance cost will fall. Earlier, you had to file different taxes. Now all you need to do is file GST. Reduction in tax evasion, increase in revenue and GDP, etc. are some of the benefits of GST. GST eligibility primarily depends on the turnover of a taxpayer. Let me explain with this flowchart. If the turnover of a taxpayer is less than 20 lakhs, then he is exempt from tax. If the turnover is below 50 lakhs and more than 20 lakhs, then he can opt for composition scheme. If the turnover is above 50 lakhs, then he has to file all GST returns. Small taxpayers have been exempted from GST whose annual turnover is less than 20 lakhs for most of the states, but in some special category states, taxpayer whose annual turnover is less than 10 lakh is exempt from tax. All the exempt taxpayers will have the option to get GST registrations voluntarily and avail input tax credit benefits. Taxpayers whose aggregate turnover is up to 50 lakhs is eligible for GST composition scheme and pay tax as a percentage of their turnover without ITC benefits. For small taxpayers, the composition scheme is optional, but taxpayer who is making interstate supplies or paying tax on reverse charge basis are not eligible for composition scheme. This tax cycle is for mid-size and large taxpayers. First, the seller files GSTR 1A by recording all the sales. Then buyer views the sales in GSTR 2A. Buyer then approves that the sales are legitimate or not and files in GSTR 2. If the buyer modifies in the sales that we recorded, then the seller can see such modifications in GSTR 1A and seller could approve or disapprove. And finally, when both buyer and seller approve, GSTR 3 is generated with the payment of taxes. Under GST, there are different types of taxes. If the supply of goods or services made within state, then two taxes are applicable. That is, central goods and service tax and state goods and service tax. If the supply is made across state, then integrated goods and service tax is applicable and further cess will be charged. Tax treatment is different for imports and exports. In case of exports, export will be treated as zero-rated supply, so no tax is payable on exports, but ITC benefits will be allowed. In case of imports, import will be treated as interstate supplies, hence IGST will be applicable in addition to custom duties. Cess will be levied for 5 years on all taxes levied under CGST and IGST. Cess will be chargeable in the value of supply, but in case of import, cess will be levied and collected on custom duties. Only exception is that no cess will be levied by a taxpayer who opted composition scheme. To know more on GST, please refer to other videos by Legal Rasta. You can also log on to our website www.legalrasta.com. In fact, you can get GST registration and GST filing services from Legal Rasta. CAs or accountants can use Legal Rasta software for filing GST return. Call us at 875 000 8585 for more details.